do you pay for this? How do you pay for that? So let's find out what the libertarian view is of why are we in the financial crisis right now? And this might be a strange one. Should we renege on our national debt? Should we just stop paying interest? And hopefully we'll also get a few words about the benefits of immigration. And that's because there are some libertarians who claim that they can be a libertarian and they're still in favor of government restrictions on the movement of people. So I'd like to get a few comments about why are we in the financial crisis, the benefits of immigration, and should we renege on the national debt?
Okay. So it's good that we have 3 topics. Since I really did not prepare any of these, I can still speak a few minutes on each, and I'm going not to look too stupid.
He can. I guarantee it.
And I'm sure that since the economist here talked a lot about philosophical issues, and probably we both, Walter and I, said stupid things about philosophy. I'm sure that Jan is going to take his revenge on economics. Also, so, well, first of all, the economic crisis, I think, is a relatively simple issue in the sense that the hand of government, of the state, is everywhere in the economic crisis. Of course, we all know that the economic crisis came from the United States. I mean, it did not come from Spain. It did not come from Russia. It came from the United States. The U.S. government the federal government has been promoting house ownership actually since the Great Depression and very aggressively since the 90s. If you are interested in this, I have lots of quotes, from people from all political parties in the U.S. saying that we had to spend, that Fannie Mae and Freddie Mac had to do a little more to actually promote housing for the poor. Chris Dodd and Barney Frank, who actually, interestingly enough, were the main artisans of the regulatory reform, the so-called regulatory reform, were among those who thought that the federal government did not do enough to encourage housing among the poor. And, they got their way. The home ownership rate went from 65%, if my figures are right, in 1995 to 69% 10 years later. So an ownership rate that was already high increased by 4 percentage points in a decade, which is quite a feat. But they succeeded doing this by basically bullying everybody into lending to the poor. Not counting, of course, not counting lots of other interventions, but let me limit this my talk to this for now. Second point is that contrary to what people like to believe, and I could say more on this if we get into the topic, there had been actually very little financial deregulation. I'm always talking about the United States, and that's what I wrote about, and that's what I know more about. So there was actually very little financial deregulation in the U.S. between 1995 and 2007. And in fact, there was probably more, there was at best a leveling off of regulation. At worst, there was still a little bit of creeping up of regulation, and regulation increased tremendously from the 1960s until the mid-90s. We have figures on regulatory expenditures, which is a proxy for measuring regulation in banking and finance, which I can say something about later if we want to. So, in a sense, although obviously not everybody is persuaded of this, but in a sense, the economic crisis, is a very straight, simple problem of the state over-intervening in the economy, both in regulating finance and banking and promoting housing than anything else. Let me just give you an example before I read this topic. The banks were holding mortgage-backed securities for several reasons, but a very important reason is that the Basel Accords, which, as you know, are international regulations imposed by each country, but following international agreement by the Basel Committee, actually allowed the bank to keep less capital when they were holding mortgage-backed securities than when they were holding mortgages. In the regulatory capital, a mortgage would count for 50% of its value in the assets of the bank, while a mortgage-backed security would count for only 25%. So a bank would need less capital to hold mortgage-backed security. It was worth for a bank, in other words, to securitize or even to sell its own mortgages and buy other mortgage-backed securities for exactly the same value, because it didn't have to keep as much capital, so it could lend more money than to keep the original mortgage. Okay, so, and I think that on this, I think that all libertarian economists, and many non-libertarian economists actually would agree. The disagreement among economists, if I have to steer some fire again with Walter, the disagreement about economists, including libertarian economists, is what was the role of monetary policy in the recession of 2007-2009. The standard Austrian view is that monetary policy, which is the presumed decreasing of short-term rates by the Federal Reserve System from the end of 2000 to 2004, played a major role. I think this is very debatable for reasons we can discuss. I do think that monetary policy did play a role. I think it was a rather minor role, if only for the fact that actually the housing bubble had started before the Fed decreased the short-term rates at the end of 2000. Another reason is that we easily overestimate the power of the Fed. Financial markets without derivatives are something like $50 trillion in the U.S., depending on the way we measure it. The assets of the central bank, the Fed, are, depending on whether you calculate them before the crisis or after, 5 to 10% of this. So, the Fed is only one participant in wide financial markets. And indeed, if the Fed did succeed getting the short-term interest rates down, it did not succeed getting the long-term interest down, which is the reason they got into quantitative easing afterwards. So, small role, but only small role of monetary policy. So let me just drop this topic here. I'm sure that others will have something to say about this, and try to address the other two topics. National debt. Again, I know only the situation, because I've been living in the U.S. for 1 year, and I've been writing mainly about U.S. issues, and I've got interested into the economic crisis mainly from a U.S. From an American perspective. The problem of the national debt in the U.S. is indeed extremely tragic, and much worse than it is in Canada. Just to give you an idea, the Congressional Budget Office forecasts that in 2075, if with the actual Social Security and Medicare programs, and just making reasonable assumptions about the increase of government expenditure in these two programs, which are a big part, like 2/3 of federal government expenditures and other expenditures, by 2075. Total federal expenditure compared to GDP would be between 45% and 75% of GDP, only the federal government. Now they are about 24% of GDP, which means that they would double or triple if nothing is done. And federal government revenues in the U.S. are now a bit lower than 20%. They've never been higher than 24%, and they've only been at 24% during the Second World War. Since the Great Depression, they've never been over 20%. And of course, before the Great Depression, they were lower than this. So you have a little gap of between, well, assuming America remains America, that Americans can't be taxed the way Europeans are taxed, you have a little gap of between 20% of GDP in revenues for the federal government and expenditures of 50% of GDP or 75% of GDP. So either expenditures are reduced dramatically, or taxes are increased dramatically, or if none of this is done, or no good combination of these two, there's going to have to be a default on the U.S. government debt.
Or you inflate your way out.
Well, yes. There could be an indirect default, which is by inflation. The problem, you see, is that many of the expenditures that are causing this increase in expenditure would also increase with inflation, including healthcare and social security, which means that it might not be a solution actually for the federal government to inflate in order to indirectly default on its debt, because its expenditures would increase. So it seems to some radical solutions will have to be adopted. Of course, the best one is a dramatic reduction in expenditures. We can only hope that this will happen. But it would have to be a reduction in expenditure, of something like 50% or 75% over a period of 50 years, or else there is a prospect of not paying the debt or restructuring the debt. There are lots, between stopping to pay the debt and doing nothing. There is lots of solutions, as were used by lots of governments over the last 30 years. And I tend to think that reneging on the debt is a good idea, because it would just prevent government from borrowing even more. Because it would have to borrow at higher rates, to the extent that they could borrow on financial markets. They could probably still keep on borrowing, but it would be at much higher rates, so they could not borrow as much. And whatever can limit the Leviathan, I think is good. Last topic, very rapidly, and here again I'll play a bit the contrarian, because, well, on these first topics I didn't play the contrarian. I really told you what the real truth is, as I'm sure everybody will agree. On immigration, when I am with non-libertarians, I always argue for free immigration from the perspective of an ideal world and an ideal society. There is no economic, or I think no moral reasons for preventing somebody who's been born on one side of the border to go and move on the other side of any arbitrarily determined political border. My problem with immigration, which is, I think, extremely simple and which should be relatively uncontroversial, is that in the statist world in which we now live, where actually people vote on what you will be able to do and not to do, opening the borders to immigration would be a total catastrophe. Whatever we have left of liberty, we would have none of it in 25 years' time, because everybody would have immigrated from, not only from the Arab world, of course, which is, I think, much more of a threat than libertarians have been thinking about, but from European countries, where they've been used to a worse welfare state than we have, and would start voting themselves a welfare state. So I think in the actual world there is a lot of good arguments against open immigration. I'm of course in agreement that immigration should not be restricted. I think that the U.S. government should find a way to legalize the presence of 20 million they say illegal immigrants in the United States. People who have great personal tragedy, who have often been there for decades, and who have now problems in our police state, to get driver's license and this sort of thing, because they don't have the totally indispensable social security number, which you now need to live in our police states. So obviously, immigration should not be restricted more. Illegal immigrants should, whenever possible, be allowed the possibility to live legally. But totally opening the borders to immigration, I think, would be a catastrophe.